It's time for Friday Coffee with your mortgage man, Eric. So you can see, we just got done raining for 2 days here in Phoenix, which is an anomaly. But nonetheless, here we go. So today what we're going to talk about is this cliche maybe, or this rumor mill of, I heard that I can use my own title insurance agency or own title company for a purchase transaction. And we're going to dive into that, and it's going to segue into some things that we do in our industry as lenders and realtors, real estate agents, that actually, in my opinion, hinder the industry and hinder the procurement of the security that we have in our industry. So let's dive into this. And the first thing, right, this title insurance thing, what does this mean? We as a buyer can choose who we want? Yes and no. So oftentimes in a seller's market, which Phoenix is for the majority right now, especially $300,000 and under, that it is not uncommon for a seller and or listing agent to counter your offer as a buyer, stating that you must close escrow at their preferred title company. So you as a consumer still can say, no, I'm going to get my title insurance from where I choose to get my title insurance. Yes, you can do that. However, there's a couple of things that happen and why you would never do this. Yes, you can technically, in spite, bite your nose off and do this, but here's why you wouldn't. One is you still got to close escrow where escrow is opened. Escrow is where your security deposit is placed to hold in escrow, where your escrow transaction is going to be done, where the property taxes get allocated through, and the homeowner's insurance and the home warranty and all those third parties, where the wires, the lender, where the wires are going to go in and out. Your title insurance, you could say, I'm going to get my own title insurance somewhere else. And you can do that. Here's what happens when you do that, if you decide to do that. So the escrow company, where escrow has been opened, they typically provide the title insurance. And what they do is they provide you with a discount of about $700 if both the seller and the buyer get their title insurance policies through them. Both sides get a discount of about $700. So if the buyer elects to not use them and go somewhere else, you don't get a discount. So you can go somewhere else and you can pay, $700 more for your title insurance if you'd like. And who would ever do that? I want to go pay $700 more for the same title insurance policy. Said no one ever, right? So there it is in a nutshell. If you want to call me and get more down into the weeds of it, I'd be happy to explain it, but got to keep moving along on the video here. In essence, yes, you can do that. You're going to be spending about $700 more for the same title insurance policy by doing that and saying you're going to get your title insurance somewhere else other than the place that has been chosen for you on the real estate purchase contract. Now, here's where I think we in the industry can shoot ourselves in the foot, if you will. We do ourselves a detriment, if you will. Two areas. One is when we counter the buyer as a listing agent and a seller and say, you're going to, if we're going to accept your offer, here's one of the terms. You're going to use our title agency. And I get it. I understand where you're coming from. As you as a listing agent, you want to protect your seller, you're representing your seller, you want to refer people to your referral partner as well. I get it. It feels good when I get that whole thing. You refer people that are in your referral network. I understand the premise. But here's what happens about 50% of the time. And this, man, I wish it didn't, but here's what happens, is that when we are using a title agency, we as a lender representing a buyer, and we're using a title agency, an escrow company that's been chosen for us by the seller's part. That's the only way we could get the contract. We usually get very poor service about 50% of the time. Why is that? Well, because look, that title agency, that escrow company, they're going to take care of their referral partner before anybody else. And as long as they're taking care of the seller, which there isn't much to do, there isn't a whole lot of service, in comparison to a buyer that you have to do for the seller. And with a buyer, you've got to communicate with the lender and the buyer and home owner's insurance and home warranty. It is a much more service-oriented part of the transaction. And when we as a lender are asking for our title fees for 2 days and 3 days and we don't get them, and then we go to get the closing disclosure statement prepared at the end, and it takes another 2 days and 3 days, and nobody's there to service the buyer, and the buyer needs to get an appointment set up, and they get passed around like a hot potato, and they get some escrow officer assistant. Look, that service says a lot, And when a buyer's got to go through that, especially a first-time home buyer, they remember that. They remember some of those things that they had to go through to close the transaction, the unfriendliness. We had to go sit down with a mobile signer. And we were in their office, but we had to sit down with a mobile signer, and they couldn't answer any of the questions. They didn't know anything what we were doing. Look, I just think that we can do ourselves a detriment by forcing that. And here's why. When I ask a buyer, a potential buyer that can go up, move up on a property, buy another home, and I say, Johnny, hey, you want to get back into real estate and buy another home? No. Well, why is that? Well, the last time we did this, we had such a bad transaction. It was just too much. It was a daunting process, and we were treated rude. And that, I'm telling you, that happens. I hear that a lot, and it's disturbing to me. And then when we dive down deep into it, there's usually two proponents that play a role in that. One is where they closed at, the title agency, and how rude they were treated, felt like a number, didn't feel like a person. And here's the other thing, where I think we do ourselves a detriment in this industry, the lending and real estate industry, is trying to close early all the time. Eric, can you close in 15 days? Yeah, I can. Look, and I think the majority of lenders out there have the capacity to close loans early. You will never hear me shout from the rooftops, I can close loans in 10 days, because that's, come on. That doesn't happen for the majority of files, and we know that. Not every borrower is a $100,000 a year in income, W-2 employee with all their assets sitting in one bank account, and they're ready to do their e-signs, and they do them 1 minute after you send them the documentation. That just doesn't happen. There are usually things that are occurring in people's lives, right? Their down payments are coming from 3 different sources, and their grandmother doesn't want to give the bank statements, and they just went through a divorce, and they can't find a divorce decree, and they've got to go down to the court, and then now we find a judgment on their credit as well through the drive report, and now we got to get the judgment clear, but the judgment is up in Idaho, and Idaho doesn't have an electronic system that they can give us a release, so we got to send for it, and there's another week, right? Look, if we're honest about this, the majority of transactions are not like this. Boom, 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 boom. So when we get a normal buyer that has things happening in their lives, and somebody died or somebody gets sick and their kids are ill and they got to go to the hospital, and they scheduled a vacation and didn't know they were going to get in the escrow, right? And these things in life that happen, and then we stick a 20-day escrow on them. Do you understand what we're doing to that buyer? Are we going to be able to get it done? Yeah, we'll probably get it done. And we closed on time on the close of escrow date, and we can pop the champagne bottle. Yes, but in the process, do you realize what we've done to that buyer? And you've got to care. Look, if you want to procure the longevity of your career, you have to carry. You've got to get this right here. You have to grasp this. That buyer had a bad experience. They did not want to stay up to 1 o'clock in the morning digging through boxes. They didn't want to have to take off 2 days of work and go down to the court system and get a divorce decree, right? They would have preferred to wait until their day off next Friday or whatever, right? We've got to grasp this, guys, is that just because we can close early doesn't mean that we shouldn't. And here in the state of Arizona, most people don't realize this, is that we're spoiled or blessed, however you want to look at it, that we have the second shortest escrow closing times in the country. I'm telling you, when your average escrow time is 25 days and the rest of the country is doing 45 and 48 and 52, and granted, the judicial states, the New Yorks, the New Jerseys, right, those judicial states, it takes 60 days, if not better, to close escrow. I get that we're not judicial, but we have some of the shortest escrow closing times here in this state, and I don't think we understand that across the spectrum of the country, and what we do in that process on upsetting buyers. And they may not tell you, you know, people are like that. They're not going to tell you, look, that was terrible. Because, look, you got them in the home. They love the home. They closed on time. They didn't pay an interest, you know, per diem interest penalty, right? They got there. But what did they go through in those 20 days? Was hell. And they think about that 4 years later when they can move up from a 275 to a 450 because they're making more money or whatever, right? And they say, I don't want to go through that again. I don't want to go through that daunting process again. So I think the moral of the story is that sometimes just because we can doesn't mean that we should. And look, the sellers have already been through this, right? A seller has already been through the gamut. They've already been through the gauntlet. They've already done this probably several times. So if we can try to flip the script, if we could try to embed this and say, look, we'll help ourselves overall in real estate, in a community, and keep our real estate at good values, if we can treat these buyers a little bit better. Well, we can close in 20 days, and if you can't do it, we can. No, it's not about that. Let's give them 35 days. I mean, like really, is the end of the world going to happen from a 25-day close of escrow to a 35? No, it's not. It's not, and you know that it's not. But my seller is paying $63 a day in interest because he has a hard money loan. That's his problem. He's a flipper, he's an investor, and he should be able to sustain another 10 days of interest. If he's helping the community by revitalizing and rehabilitating the community, he should also understand that he doesn't want to, you know, hold a proverbial gun to their head and forcing them to close like that. Again, most lenders can close very quickly. And when I get asked that question, yeah, I can close by the end of the month. Sure, I can. Can our buyers? Are our buyers going to want to? Are they going to hate us because what we're going to do to them? And you got to go dig out your garage at 2 o'clock in the morning tonight to get me those things. You're going to have to go down to the courtyard or court tomorrow and get that divorce decree. You're going to have to fly to Nevada and get the judgment release, or pay $100 for an overnight courier to do it, you know, or whatever it is, on and on. You're going to have to talk to your grandmother and tell her she's going to have us to give us those bank statements or else, you know, because she's given the down payment. So there are some things that we have to just bring into consideration, that we don't do ourselves a detriment for the future. Look, with that said, look, that's just my opinion. Some of the things I come across, I want to be here for another 20 years. And I want to treat our buyers right, and I want our buyers to have a good experience so they come back and they go for another property, right? With that said, guys, Friday coffee with your mortgage man, Eric, in a beautiful Phoenix, Arizona. See you.